The stock market at the time of recording this video, at least for the SPY, is up a 0.5%. At one point today, you hit 565. That was the low of the day today. That is a peak to trough decline of about 8% for markets, roughly 8%. You were down over 1% today. Markets have come back following what really seems like, on the surface, Goldilocks data. But when you dig into it, it's not that great. Now, what's also fascinating about today is Scott Bessent actually gave us an economic warning that the economy may be starting to roll over. And it doesn't seem like too many people paid attention to that. And I think this bounce is another one of those tactical bounces. This is not August 5th, 2024 all over again, where you hit a low and you rally to new all-time highs. So that simply is not going to happen. And I'm forced to be more conservative, more on the bearish side, even as you're down 8%, because yes, we're going to bounce, and we probably bounce here into next week, but I don't think this is a roaring kind of new all-time highs after new all-time highs kind of market. And I think you want to have a long-term strategy here. And I will talk about my long-term strategy in this video. Now, before we get into your headlines from Fed officials today, your major economic data, what Trump had to say about tariffs, potentially putting reciprocal tariffs on Canada as soon as today, if not today, on Monday or Tuesday, really escalating trade war tensions even further. I want to share this with you guys, and we'll look at this here in just a moment, but there is a massive disparity here between the household survey for job creation today, which was negative 588,000, and the BLS survey that showed a positive 151,000. This is the second worst monthly household survey for employment in the past couple of years. I mean, this goes back to 2021. You have not seen a number like this. And it's alarming. Even though you kind of came in with a Goldilocks headline number, things may not be as good as you think. And the warning from Treasury Secretary Scott Bessent today, I think, is something you have to formulate into your longer term kind of outlook for this market. Because in fact, I mean, Scott Bessent here says the economy could be starting to roll a little bit. He's saying that we could be seeing this economy that we inherited starting to roll a bit. Sure. And look, there's going to be some natural adjustment as we move away from public spending to private spending. He says that we are going through a detox period. And as I've said now for the last week or so, I've compared this economy and government spending to an alcoholic where, you know, you're addicted to alcohol, whatever, fine. You go through that withdrawal period and that sucks. And then you come out in a better position. That's what we're going through right now with less government spending. It's propped up the economy. It's been stimulus. And Scott Bessent basically said the same thing that I've been saying. A detox period, a period of transition could be painful. And it's not going to happen overnight. It could take a year or two for the economy to really, you know, transition and get and see the full effects of less government spending. Now, obviously, I think a lot of that will happen over the next couple of months, really the next 6 months or so. And that's kind of alarming for the state of the economy, because with all of these things kind of happening at once, tariffs, less government spending, more layoffs, and general uncertainty, it's hard for me to say that this is a longer term bottom for markets, only down 8%. That's a hard sell for me. So longer term, could we fall further from here? Probably. And I think, you know, tactically, you can play this as a bounce. You've already bounced 2% from the lows of the day today. Okay. And maybe we bounce into next week, maybe the week after that. But in the coming months, I do think we go lower. So I think you still want to raise cash, be defensive, hedge when it makes sense. If we rally big in markets, a downside hedge makes sense. You know, if we sell off a lot, an upside, you know, hedge as well, or call can also makes sense. Let's get into what Fed officials said today, as well as Trump, and where we are with markets. First and foremost, I was a little concerned about the jobs numbers that we were going to get. Now, I don't know how the jobs came in this strong. It's actually incredible. No, some of it just doesn't make too much sense. Like government payrolls increased 11,000. We were expecting negative 20,000. To me, that doesn't make much sense with the people that were laid off. So I don't know how big the lag is in this data. It really makes you wonder if the next couple of months could be weaker from that perspective. Now, last month's non-farm payrolls was 143,000. It was revised down to 125,000. We were expecting 160,000 jobs for the report this morning. We came in at 151,000 jobs. This was kind of the sweet spot. Not too strong, but not too weak, right? You didn't want to see either of those outcomes. You didn't want to see a 300,000 jobs report, and you didn't want to see a negative jobs report. So I think this is kind of Goldilocks for markets right now. The unemployment rate did tick up to 4.1%, which is interesting because most people expected this to stay at 4%, even a lot of Fed officials. So unemployment rate is starting to rise, and this is the thing that could get the Fed to react in the coming months as it does move higher. So again, kind of Goldilocks. Nothing too far out of the range of expectations, I would say. You had a bunch of Fed speakers as well today. Fed Bowman, Fed Williams, Fed Kugler, and Fed Jerome Powell, and I have the headlines for you. Fed Kugler says uncertainty is difficult for all parts of the economy. Fed Kugler says there is a high level of uncertainty around tariffs. Fed Kugler says it is possible that we'll see more persistent inflation due to policies. Fed Kugler says, I am paying a lot of attention to inflation expectations. And here, look at that. Fed Kugler says, I don't expect government job cuts to show up suddenly. So kind of what I was just explaining, you could see that come in with a bit of a lag. And Fed Kugler says that he is not worried about a small uptick in the unemployment rate. He says hiring remains above the break-even level, and the February jobs report was a quote-unquote solid number. President Trump today, in response to the jobs report, says, for the first time in 15 months, the job gains for native-born Americans exceeded the job gains for migrant and foreign workers. Employment for native-born workers went up by 284,000, while foreign-born workers went down by 87,000. The Canada Trade Minister says about 40% of products exported to the U.S. are U.S.-Canada-Mexico Free Trade Agreement compliant, which Mexico said almost all of their trade is compliant with this free trade agreement. So Canada looks like they're in a much worse spot than Mexico because Trump said there won't be tariffs on goods that are compliant with the free trade agreement. Now, this headliner from Powell really caught me by surprise today. Fed Powell says the Fed staff is marking up potential growth estimates for now. That potentially the economy is getting stronger. I don't know if that's a ploy to try to save the stock market or whatnot, considering we've been going through some of these growth concerns. But I don't know how you justify that when the Atlanta Fed GDP Now tracker is currently tracking negative 2.4% GDP for Q1. Fed Powell says some factors suggest productivity bursts to be one time. And I think this is one of the headlines that really kickstarted markets today from the lows that we were trading at, down over 1%. Fed Powell says the economy is fine. It doesn't need us to do anything. Again, the growth concerns recently, some of the bad data that we've gotten recently, has put people on edge. And Fed Jerome Powell came out and said the economy's fine. Fed Powell says if this turns into a series of actions, or if tariffs are larger or expectations start to move, that would influence how the Fed reacts. Fed Powell says the labor market is solid, broadly in balance, inflation somewhat above the 2% goal, but moving closer to target. And Fed Jerome Powell kind of throws some of the University of Michigan inflation expectations surveys to the side, he says most longer-term inflation expectations remain stable and consistent with the 2% goal. Now, what's actually interesting about the jobs report today, as Holger here says on X, he says, oops, the U.S. labor market is on recession alert as job market cools with large discrepancies between establishment survey and household survey. Establishment survey showed 151,000 new jobs in February, less than expected. According to the household survey, 588,000 jobs were cut in February, which is why the unemployment rate has risen to 4.1%, although the participation rate has also fallen from 62.6 to 62.4. I mean, you have not seen a discrepancy like this in a long time. I mean, the only other instance was what looks like December of 2023, where you had like 700,000 household survey respondents say that they, lost their job. Other than that, you haven't seen a number this negative, like, in the last couple of years. Fed Jerome Powell says some near-term survey and market measures of inflation expectations have moved up, driven by tariffs. Trump says today, hopefully we can have a peace deal with Ukraine. And Trump says that something's going to happen very soon with Iran. Trump said this about tariffs, quote, there will always be changes. So, yeah, that's basically saying expect things to be volatile with tariffs. Trump says that he's expecting good economic data and reports. Goldman Sachs has cut their 2025 US GDP growth forecast to 1.7% versus a prior forecast of 2.2%. Trump also says that India has agreed to cut tariffs, quote, way down. Trump said that we might put more tariffs on Canada either today, Monday, or Tuesday. And that is what did send markets down a bit in the first half of trading. And Trump says we will shrink the government and grow the private sector. Fed Williams said today, I still think the neutral rate is lower than in the 1990s. And it's also being reported that Putin is said to be ready to agree to Ukraine truce with conditions. Trump trade advisor Navarro said this about reciprocal tariffs, quote, one number for each country. Reciprocal tariffs will focus on one tariff rate for each country to reflect tariff and non-tariff measures. And Navarro says the Trump administration will bring positive supply shocks, which implies it will be good for inflation. Fed Bowman today says labor market and economic activity will become a larger factor in U.S. central bank policy discussions going forward. Fed Bowman says shocks and structural changes since the COVID-19 pandemic may have masked transmission of Fed policy to the economy. U.S. economic advisor Hassett says, quote, we will see a bigger hit on government employment in the next reports. So, yeah, jobs reports in the next couple of months could look pretty ugly. Mexico's President Sheinbaum says we shouldn't face reciprocal tariffs in April. The CNN Fear and Greed Index today is sitting at 19. Yesterday, it was at 17. So a little bit of a recovery, but still in extreme fear territory. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility, extreme fear. Safe haven demand, extreme fear. Junk bond demand, in extreme greed. You can also see the percent of stocks trading above their 50-day moving average, up 1% today. So almost 31% of stocks are now trading above their 50-day moving average. I mean, that's a good start, but you're at very low levels still. And I mean, markets are still overall pretty damn negative. You could see this as well in the AI investor sentiment survey, where bullish investors actually fell from last week. Now, last week was the highest reading of bears you have seen since the bottom of the 2022 bear market. Okay, normally when you have 60+% of investors that say they're bearish over the next 6 months, the S&P is typically down 25% or so, right? I think it's technically 27%. So this is a pretty rare occurrence where people are this bearish as markets have only fallen a little bit. Okay, now yesterday's report showed 57.1% of people that are bearish, 23.6% that are neutral, and bullish investors at 19.3%. That is down from 19.4% in the previous week. Again, you gotta buy something here. Even if we do fall further, as long as we don't have a recession, I think a lot of bad news could start being priced in, especially in your high momentum areas, stocks that have done poorly, because it's really just a balancing act, okay? You're never going to go all in this market at exactly the bottom. It's about saying, what are the odds of a larger slowdown or a deeper crash in markets? I mean, there's good odds of that throughout this year, but there's also a chance that you may never see Tesla in the 260s again, or you may not see Palantir in the 80s for a long time, or, other similar stocks that have gotten beaten down. And this is the fastest sell-off you've seen in markets in, a long time. I believe since the COVID crash, you have not fallen this fast. S&P's down about 7.8% until we get economic data that, continues to get worse or looks like we're heading into a recession. This could be a short-term bottom. You've been finding a lot of support around the 200-day moving average. Today, you fell below this 200-day moving average, and then buyers stepped in and bought the markets, right? Bought the markets up, and it looks like you're going to close near the high of the day today. That's a good structural and technical sign for a little bit of a recovery, but I don't know how sustainable it will be. You will probably get, a lot of resistance around that 590 level. I wouldn't be surprised if you chop sideways for a bit, and then fall to lower lows as the economy does weaken and recession fears rise, which I do think that will happen at some point. I just don't know when, and between now and then, you could see a bounce in markets. And the Treasury Secretary, Scott Bessent, says that the economy could be starting to roll a little bit. He says, quote, Could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. What the hell? I've said this literally. I've said these literal same words. I've referred to this economy as an alcoholic, right? In regards to government spending, that for a short period in time, that could be a year, that could be a year and a half, something like that. There's going to be a transition period where we go through withdrawal and the economy, looks bad for a period. And that's literally what Scott Bessent just said as well. And that's why I'm hesitant to say that the ultimate lows are in for 2025. Because if things do get worse with the economy, sure, the Fed's going to cut, rates are going to fall. But that's not going to be great for stocks. And it's kind of wild because if we hold these levels into the end of the day, the SPY's already bounced 2% from the lows of the day today. So that's where things just are super weird and volatile. You've technically bounced 2% already on the SPY. And you're only up 0.79% of the time of recording this video. So a small green day is actually a 2% bounce when you consider the lows of the day. That's kind of wild. Nonetheless, here on the day today, the Dow is up 0.72%, S&P up 0.75%, NASDAQ up 0.9%, Russell 2000 up 0.34%. The VIX is only down about 5%, so there's still quite a bit of fear out there. People are not rushing to get rid of their puts, so that's kind of alarming. And one other thing that I will say here is you've really not seen the panic spike in the VIX. You haven't seen that capitulation yet in the VIX, where normally you do before a correction ends, which leaves me a little hesitant, again, to say the bottom is in without seeing that capitulation moment. And again, the bottom, is a short-term bottom. It is a bounce, not that, we're not going to go lower this year. Normally, you see in a moment of fear And you really haven't seen that yet. You've just seen the VIX slowly work its way higher. Now, Treasury yields today are moving up about 4 basis points. Oil is up 1.27% today. Gold is down around 0.5%. And cryptos are generally lower, like Bitcoin down almost 1%. Let me know what you think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.